All right, let's just jump right in. So it's early 2026, and we really need to talk about Palantir. I mean, the company's trading at a valuation that, on paper, just looks insane. It's astronomical. And that brings up the one big question everyone's asking. Is this for real? Is this price actually justified? Or are we just watching a massive bubble inflate right before our eyes?
So take a look at this. The stock is bouncing around $170 a share. And you know, if you're a traditional buy-the-book value investor, you look at the raw numbers, and this thing, PLTR, well, it doesn't look like an investment. Honestly, it looks more like a crime scene, a bubble that's just begging for a pen.
And this right here, this is the core conflict. It's like a tale of two completely different companies. On one hand, you've got the traditionalists. They're looking at a price-to-earnings ratio of like 167, and they are screaming bubble. They're using these old-school hardware-era metrics to judge a new-era company. But then you have Palantir's actual reality, and that reality is built on totally different numbers. We're talking about a rule of 114, the signs of an emerging monopoly, and software that, no joke, powers some of the most high-stakes decisions in the world.
So which one is it? That's the big question we're going to tackle in this explainer. Are we looking at just another crazy, overhyped tech stock, or are we actually witnessing the creation of the operating system for the entire Western world? I mean, for everything from corporations to the military. Let's dig in and find out. Okay, first things first. To even begin to understand that stock price, you have to look at the financials. But we're not talking about just plain old revenue and profit. No. This is about the elite math behind the stock price. I'm talking about a set of numbers so absolutely wild that Wall Street has no choice but to pay attention.
Okay, so in the software world, there's this thing called the Rule of 40. It's kind of the gold standard for figuring out if a company is healthy and growing well. It's super simple, really. You just take the company's revenue growth rate and add its profit margin. If the total is more than 40, you've got yourself an elite, top-tier company. That's the benchmark everyone shoots for.
Right? So that's the gold standard. But here's the crazy part about Palantir. They don't just meet the Rule of 40, they absolutely obliterate it. Check this out. Their year-over-year revenue growth, 63%, and their adjusted operating margin, 51%. So you add those two numbers together, and you don't get 40, you get 114.
114. Just let that sink in for a second. A number like that is, well, it's pretty much unheard of in enterprise software. I mean, historically. And this is the number one reason why the market is paying such a crazy premium. It's a massive signal that says, hey, this company is in a league of its own. It's achieving hypergrowth and huge profitability at the same time, which just doesn't happen.
So you're probably wondering, how on earth did they get here so fast? Well, 2025 was the year everything changed. A couple of huge things happened. First, they got in the S&P 500. That's a big deal because it forces all those giant index funds to buy the stock, which creates this nice, stable floor under the price. But the real game changer? It was their go-to-market strategy. These things called AIP Bootcamps. They stopped selling software and started selling results. And because of that, their sales cycle, which used to be like 9 months, got crushed down to just a few weeks, sometimes even just a few hours. It's revolutionary stuff.
All right, so that's the financial engine. Now let's talk about the fuel. This brings us to our second big point, the commercial conquest. All that incredible financial performance is being driven by their artificial intelligence platform, or AIP, and it is absolutely taking over the commercial world. I mean, Palantir is quickly becoming the AI backbone for corporate America.
And if you want to understand just how big this conquest is, you just have to look at one number, 121%. That was their U.S. commercial revenue growth, year over year. No, that is not a typo, 121. And look, this isn't some tiny startup we're talking about. This is a huge, established company pulling startup-level growth numbers. It's a clear sign that a tipping point has been hit.
So what's causing this explosion? Well, it's a huge aha moment that basically swept through every boardroom in the Fortune 500 last year. Everyone realized that generative AI, the cool chatbots, by itself, it's kind of a toy. It's fun, but it can't actually run your business. It can't optimize your supply chain or help you build a car, and it definitely can't target a missile. To actually be useful in the real world, AI needs something else.
And that something else has a name, ontology. And honestly, this is the secret sauce. This is Palantir's entire moat. See, they aren't selling you a fancy spreadsheet or a data analytics tool. They're selling you a digital twin, a living, breathing model of your entire business. Think about it. It's a map that doesn't just see trucks and factories as dots on a screen. It understands the relationships between those trucks, your employees, your supply chain, your customers, everything. It turns a giant mess of data into an actual engine for making decisions. And because they have this ontology, they can do something that is the absolute holy grail of enterprise software: operational write-back. Here's how it works. It's pretty amazing. The AI spots a problem. Let's say your inventory is running low on a critical part. Then the AI proposes a solution, like, hey, should I draft a purchase order for more? All a human has to do is click yes. And here's the magic trick. Palantir software doesn't just send an email. It actually executes the action. It writes that order directly back into the company's core systems, the SAPs, the Oracles. And let me tell you, once a company lets a piece of software actually do things for them, they become incredibly dependent on it. You don't turn that off, ever.
Which brings us to our third and final pillar. And this is the bedrock, the unbreakable moat. We're talking about the defense business. For years, everyone kind of wrote this part off as slow and lumpy, but that's all changed. Palantir isn't just another vendor anymore. They've become indispensable government infrastructure.
Just look at what happened in August of 2025. The U.S. Army handed Palantir a massive enterprise agreement. The ceiling on that deal? $10 billion. And you have to understand, this wasn't just another government contract getting signed. No way. This was a massive signal that the strategy inside the Department of Defense was fundamentally shifting.
What that $10 billion deal really was the Pentagon raising a white flag. They were basically admitting, okay, our decades-long attempt to build our own software has been a total failure. So now they're shifting to buying software that already works off the shelf. And who's the biggest winner in that shift? Palantir. They're not just some contractor you can fire anymore. They've become as essential to running the Pentagon as the electricity that keeps the lights.
And this integration isn't just on the surface level. It goes deep. We're talking about owning the military's kill chain, the whole process from finding a target to hitting it. You've got stuff like the Titan program, which is basically an AI ground station for targeting. And get this, a software company, Palantir, beat out all the old-school hardware giants to win that contract. That's huge. Then there's Maven, the AI that watches all the drone footage. That's now an official program of record, meaning it's here to stay. And then there's the one nobody talks about, Apollo. It's the platform that manages and updates software on things that are disconnected. Think drones, submarines, satellites, and space. It's absolutely critical. And all of this, it all feeds into this new reality of modern warfare. See first, strike first. That's the whole game now. And this isn't some movie script. This is the real software-defined future of defense. And Palantir is literally building the brains of the operation. Think about it. You would never, ever swap out your entire operating system in the middle of a war.
Okay, so let's pull all of this together and try to come to a verdict for 2026. On one side, you've got this absolutely incredible future potential we've just laid out. But on the other, you have a stock price that looks like it's already priced for absolute perfection.
Now look, we have to be fair here and talk about the risks, because they are real. First, there's what I'd call execution risk. When your stock is trading at 160 times earnings, there is zero room for error. One bad quarter, one missed target, and the stock could get hammered. Second, you've got the big picture stuff, macro risks. If interest rates spike, that could pull down the valuations for all high-flying tech stocks, not just Palantir. And finally, you got to talk about competition. Of course, giants like Microsoft and Snowflake are trying to build their own versions of this. The big question is, can they catch up to Palantir's 20-year head start, especially in these super intense, high-stakes government environments? And that really gets to the core of it. It's a difference in corporate DNA. It's just who they are. Think about it. Microsoft, they build fantastic software for people working in an office. Palantir, since day one, has built software for soldiers, for spies, for people operating in the most hostile and complex environments on Earth. That's a battle-hardened DNA you just can't fake overnight. And it turns out, the same math you use to find a terrorist in a network can be used just as effectively to find an inefficiency in a supply chain. So after looking at all of this, what's the big takeaway? What's the final verdict? Well, the conclusion is this. If Palantir stays on this path, we are not looking at some niche software company. We are looking at a company that has a very real shot at becoming one of the top 10 most valuable and most important companies on the entire planet by 2030. And that brings us full circle, right back to the question we asked at the very beginning. Is Palantir ridiculously overvalued? Or is $170 a share just the price of admission? Is that what it costs to buy a piece of what could become the fundamental operating system for the future? That is the multi-trillion-dollar question you have to decide for yourself.